Well, good evening, everyone. Hey, it's Shooter Scott Henderson. It is August 7th, I guess about 9 p.m. I wanted to drill down in some charts and sort of give us a look after today's sort of sell-off into the close, which, quite frankly, I expected it to at least hold up into the CPI report. It's not good that it's broken down already, because chances are that means some of the big whales already know what the report has. So I would expect for some continuation. So let's see what we see here. And of course, at the end of our presentation, please do review our disclosure. All right, let me start off with the SPY. Now, I'm seeing this on the 4-hour. I'm seeing the potential for an equal ABC pattern. And obviously, for those of you that don't know my work, I tend to keep it in nice, simple boxes. And in corrective legs, I look at one of three outcomes: equality, which is where A equals C, and then an extended ABC pattern, basically where C equals A plus 25 to 50% of A. All right, so it extends just a little bit. This tool gave me a good way to look at that. So, we'd look at about an extended ABC down to about 442 and an elongated ABC down to maybe as much as 388, in that range. That's sort of the look. Now, the count doesn't see that ABC pattern that way. I'm just going to get rid of this because I don't need it now. It served its purpose. The count actually sees this 504, but I wanted to highlight the ABC pattern I'm pulling up on a shorter time frame to give you a visual difference. So we break below this 504.78, which is about $10 from where we are. Look for some continuation, and then obviously we have our different markers based on that from those levels. So let's jump over to the Nasdaq. Little different look. Now I'm actually seeing an impulse leg down, not an ABC. All right, the count currently sees a wave 2 down around 403. However, a measured impulse leg goes down to about 384. So that would be your better entry price to the downside. I know that Kirk had noted he put in a buy at 415. What I do is I break that up, buddy. Do 415, do 405, do some 385s or 390s. Just break it up into those blocks. Good till cancel type orders. And then we should. I don't think this invalidates our high. I think it's until we get caught up with the Fed and whatever's going on in the Middle East and whatever's going on in Asia, which could be a couple months out. So we could build out this huge flat here before we start our next leg moving to the upside. Now, no matter what way you look at TLT, it's bearish. We sort of have some confirmation of the breakdown. Now, right now I've got a better entry at 185, but I'm not suggesting you take IWM because the larger time frame that I have on this count really breaks down 113. We're looking for significant downside in small caps, which is not good for this economy. That pretty much indicates that we have a recession or maybe a deep recession, but it shows the potential for a hard landing. So let's drill down just a tad bit more. Let's look at semi. All right, now right now the count suggests that our back wave 2 is going to about 192. However, on the 4-hour, when I look at my scans, I see an impulse leg lower, maybe down to 158, closer to our vulture price. So that would be your better entry. Now, of course, we don't want to miss these bottoms, so let's talk about how to scale in. Use pieces. Use good to cancel orders. Put a couple in there at 195 so you get filled. A few at 190. If you wanted it, 175. A few at 165. A few at 160, right? And if they expire and they don't fill, great. Now, what we also want to do is, hey, when have we found our bottom? Well, most of the time what happens on an uptrend, you get sort of a lower low in RSI, and then you get a divergent print in RSI, which would be that you have a lower low in price, but you don't have a confirmed low within an uptrend like you do to the upside. Like, for example, this is a confirmed high and a divergent high. You're not going to get that confirmation when you're in an uptrend to the downside because the bottom's not in at the bottom side of the channel. So let me just repeat that again. So we're going to get an RSI print below 30 with a lower price, right? But not a lower low in price. It shouldn't go below this, right? And then we get a divergent low on this bottom. So let me see if I can find one here on the bottom to give you an actual visual. Divergent low. So here we have a lower low in RSI and a lower low in price, okay? Now we have a lower low in price and a higher low in RSI. That's what I mean by divergence. That's what you want to look for. That little thing right there that's going to occur here on this low. That's where you know your bottom's in. Then what you do is you come in and say, okay, this is I'm just using this as an example. Let's say this is our bottom. This is our prior high. We break above that high right there. That's where you want to be at a full position size back on that move to the upside. After you get that confirmation with that divergence, that's how you play that every single time. Don't change it. Exactly what you do. All right. Now let's look at XLF. Now again, here I'm seeing an impulse leg lower. However, the count right now is seeing a cycle wave low around 38. So it's seeing about $4 lower down towards the vulture price. Notice where trend support is there. So we sort of had 1, 2, 3, maybe this was our second grouping. This will be our third. It could overshoot. I mean, we could get down into the 30s. That would coincide with a financial crisis, by the way. So the charts tell a story if you listen, okay? Now, one thing that I want to point out here, notice how the confirmed high worked on this on the weekly. Notice how aggressive, how euphoric that leg was. That's out of the ordinary. What does that mean? That means that it's very likely we get a reversion to the mean. Now, let me come in here and throw something else in here because I like to do this because I think it's fantastic that it shows it. So right now, the count on the weekly shows a corrective leg to about 38. So it sees something similar to the Elliott. So we have some conviction there. The downside. Now I want to go down to the daily and look at this. Daily brings us a little bit lower, okay, where we're looking at maybe 38. The 4-hour doesn't see anything different either. So at this point, I'm not seeing anything that's aggressive to the downside that supports that impulse leg, at least with those technical tools. But we did have a confirmed high and a divergent high. So to me, visually, I see things that even the app doesn't see, no matter how much it wants to work. So I'm going to come in here and just see if we can scan for this, see what it sees. Yeah, see now it sees, a potential range on this between 36 and 40, which is still within the range. I mean, the low side, it comes down to the 34. So it's within tolerances, I call it. All right. Let's take a look at XLE. Now, the count currently sees $84. And right now I'm seeing a better entry at 82. However, this looks to me like same scenario. We've had this huge run up. We have this flat pattern. We break down here roughly. We get below this 75.34. And then we could back test this 382 down here around 54. So, I'm seeing a lot of weakness in the charts as I'm going through this, just looking where we are after today's close. And that's my thought. I wanted to share that with you. Hopefully that was helpful. And of course, please like and share this video, of course. And if you're not a member, please join. We welcome all new members. Of course, great trading. Until next time.